Hey, what's up, everyone? It's Josh Flores from Wall Street Saturday. I just want to thank you guys for checking out the video this week. If you can, please support the channel by liking the video and subscribing. And I just want to inform everybody that everyone on this video are not financial advisors, nor anyone's financial advisors. Anything that's said or seen on the show is strictly for educational purposes only. With that being said, please enjoy the show. Hey, what's up, everybody? Thanks for another episode of Wall Street Saturday. You have Josh Flores here.
Joshua Trusty.
Misael Gonzalez.
Yeah, thanks, guys, for getting on a call. We just wanted to bring up some big important things that have happened this week. I mean, to be honest, it is big and important just because it keeps crashing the market, but it is the same update from the past couple of weeks, and that is inflation and the situation that's going on with Russia and Ukraine. I just want to point out that on the 28th of January is where we started our recovery. And then we kept on recovering until February the 9th, which was Wednesday, where we got new CPI data, which revealed that inflation is now at 7.5%. And then the day right after, which was yesterday, Friday, the 10th, or not the 10th, but the 11th, was when we were starting to really get concerned about the Ukraine and Russia situation there. I had seen some things in there that the US is actually pulling their citizens out of Ukraine. I don't know if you guys had seen. I think Japan is also doing the same.
Yeah, we're starting to see diplomatic action in terms of getting people out of embassies and asking citizens to get out of the country. That's not a good sign. I mean, we saw the same in Afghanistan, that, you know, in the evacuation was imminent. We're not evacuating people from there, but yeah, just this morning, Biden apparently had a call with Putin, just trying to talk things down to prevent a last minute effort to prevent an invasion. So at the moment, Russia has 130,000 troops on the border, and looks like the U.S. is sending around 9,000 troops each week for the past few weeks to neighboring countries just to have them ready. So it looks like it's not a matter of if but when. I predict that it's going to be over this weekend, and some others have predicted that maybe it's midweek next week. So something to think about is the oil energy story. You know, oil could very soon be closing at $100 a barrel, which hasn't happened since 2013. And the other thing that is also going up is natural gas. So looking at our DFIN play, if you go to the 1 month chart, we see that it's a V-shaped recovery. And if you go to the 6 month chart of DFIN, we see that a triple bottom. So that's very bullish in terms of how these defense stocks could do in face of war. So something to keep in mind as we hopefully, you know, wait for this invasion to happen and the stock market to react.
Yeah, I wanted to point out that if you've been on the channel for a little while, you'll know that one of our plays over here is GUSH. And I just want to point out, and I can actually share my screen and show you guys what I'm talking about over here. But this is the double leverage bull for oil and gas. And luckily, the past 5 days, it has been up 5%. It does have its better days. I think yesterday it closed at 7%. So of course, it must have been down at some point. But year to date, it's still up 26%. And right now, if I would be encouraging it, I think that I would personally downgrade it to just a hold versus a buy. But if you really do feel like oil might be increasing more beyond where it is right now, and I think that right now it's trading at $93 a barrel. I know that last week we were speaking like, man, maybe this can actually reach 100. It wasn't as quick, but it is moving up. I mean, every single week when we come back to visit it, it's literally just gone nothing but up. And so if anybody is actually looking into getting into some of this, I use this bar chart website to kind of help me. There's this thing called the trader's cheat sheet. And right now we're looking at GUSH. And so what I do, and this is what I do for everything, and I can see where it closed at, which it looks like it's actually a little bit off. If I'm seeing, oh nope, 121.62. So yep, it's accurate. And so what I actually do is on a normal day, if inflation wasn't killing all the stocks and the valuations, or not necessarily the valuation, but the prices, I would be looking at this first support point, which would be 116.29. But since we're in such a volatile market, I've actually been setting my orders right here at the third support point. Of course, I could pull out a chart and do this myself, but I'm a working man, and I want to just take the resources that are out there for me. And so if I was looking to get into this play at all, I'd probably look around this 107.91 time price right here. And that's just my encouragement. Just trying to be careful, like Misael said, $100 a barrel is an 8-year high almost. And so Josh Trusty, if I'm saying this right, I think you were predicting that if they go to war, the barrel of oil might go to $110. And so I just think that it's especially when you're leveraging like we do in this group, I just think you might want to look into some of those indicators there. Anybody else have any thoughts on that?
Yeah, so I mean, I would say GUSH is definitely a play that would benefit from a wartime effort with increased usage of oil. One other ETF you might want to consider would be XLE, which is one of the spider ETFs, which is part of the S&P 500. So they actually have a Sharpe ratio of 1.91, whereas GUSH has a Sharpe ratio of about 1.41. So obviously, in modern portfolio theory, if you want to make more money, you would have to go with a lower Sharpe ratio, but with less certainty. So maybe some sort of combination of the two might be something that you would be interested in at some points. But GUSH would definitely stand to benefit. XLE, which gives broad exposure to energy in the market, would be also a good option, but that's up about 23%, so less than the 26% of GUSH. So yeah, there are definitely a lot of opportunities in the energy space or the oil and gas space that would stand to benefit from a market that is seeing a global war effort happening. So whatever you do, make sure at least you're in the game so that you can actually start making some money here.
Definitely. The only thing that I want to say, just to conclude before we stop today's show, is that if you're actually looking to get into some stocks altogether, I can share with you some of the things that I'm actually looking at, in addition to some of those oil and DFINs plays. All of these right here are technology. And I think that despite the inflation and the interest rates being an issue, I still think that as an economy, as a country, they're still going to inherently grow. And I think that the S&P will still close higher than what it opened this year. And so I'm looking for specifically software developers and chip makers. And the one thing that we, of course, need to point out is that Alphabet is doing is 20-for-1 split. And so I'm going to be looking to get into that whenever that is. I need to research what day that actually is, but obviously Google is Google's Google, right? I mean, it's the #1 searching platform of information, and the #2 is actually YouTube, which of course falls underneath Google as well. So they're in a very good spot. And so if you're looking to get in, currently the price is 2,600 right now, but a 20-for-1 split would be somewhere around 134. And of course, I think that would be a very good value play, especially in this volatile market. But with that being said, this is everything that I'm looking into this week.
Yeah. One other note is that one of the advantages of having that sort of stock split is that you can get more shares and versus say fractional shares, which will enable you to begin voting even more and have more power and influence within the company. So that stock split will actually benefit the retail investor a whole lot more. So that's just another incentive for you to stay long, stay green, and stay engaged as well.
Hey guys, thanks for checking out the video this week. If you haven't already, please like the video and subscribe to the channel. Every week we're going to be uploading a couple of videos every Saturday of opportunities that you can take advantage of in the markets. Thanks again and have a happy trading week.